Hello traders, Nick Shaheen here looking at, I don't know how to pronounce it, Hyliion, HYLN is the ticker symbol. I've heard it pronounced several different ways, so let's go with Hyliion. Speaking about the stock chart, first of all, the segment, the EV segment, although this is not an EV pure play, but it's bunched up in there, is on fire. You can't go wrong. Everybody's happy about everything except when the story breaks. So you have NIO running one way, Tesla running the other. Just a little background, we've had EVs since the 1800s. 1890, I think, is when the electric car came out. Obviously not in the same format it is now, but they've tried. They've looked funny until Tesla came around. They always made them like a bubbly little thing that nobody wants to buy. And then Tesla came and made it cool. So they earned the first mover advantage, and they solidified and made it possible to look forward and say, okay, you know what, this EV thing may actually bump the internal combustion engine ICE out. I've had the debates with friends, and they called somebody, a smart person, said that ICE is dead, and that's physically untrue. We have 90 million internal combustion engine machines a year, new. That's not a dead market. That's 90 million units versus 2.5 EVs. So there's the upside potential, right? Yeah, but my contention is that it's the incumbent car makers that are going to fill that need more so than these niche newcomers. Now this is sounding like I just did this video, so maybe I don't know why it's sounding like I just did this video. Anyway, deja vu moment. This one is a little different. So this company I thought was a little different. I thought because it's a semis basically, and they do have a product now which is a hybrid. So the idea is to retrofit one of the axles of the driving piece of it to be fully electric. So my vision is that, okay, so if somebody has a semi, they want to be hybrid, they've got the solution. If somebody wants to buy a hybrid solution, they have it, and they have a proposal for a fully electric solution going forward. So this should be on paper as good an upside potential as possible. It is semis, so we're not talking consumers, but so here's the technical aspect of it. So fundamentally, it's all basically a bet on the future. You either believe in the company or you don't believe in the company. I saw some videos out there of people pumping it. I'm agnostic to it. I don't have a trade in it. I had one for like 15 minutes. Not really, but it was longer than that. But I don't like it because my perception is something's got to give right here. And let me show you the lines I have. Now, I don't want anybody to be upset with me because I share a potential catastrophe here as one of the scenarios. This is not my scenario. In fact, when a stock comes back down into a base that has been this like perfectly line drawn, my presumption would be that it's going to hold because the downside scenario from that is going to be disastrous. It's mathematically negative. So basically it's saying that the company will be out of business should that happen just from the chart. I'm not saying that, just from the chart. So let's put down the lines. So these were the scenarios I had earlier. I did not update them. I thought it would dip a little bit, find support in this cluster, bounce, and then have the opportunity to break out from here. That didn't happen. It fell into this. It didn't even try to hold. It just gapped down and rallied. So now the same scenario I had here would be here. I said a proven base equals support. Lose it and bad things can happen. I didn't point to the mathematical calculation, but you've heard of Head and Shoulders. I didn't make this stuff up. This is as clearly drawn one as you can have, and the downside potential that the experts in said patterns say it should be as deep as this. Well, in this case, we'll put it into 0 and below. So that is not my scenario, but it's right there. The problem also with that is that the overall markets, which just set a new high on the day, today is the December 3rd, they can't stop making higher highs, and they're at all-time highs. The smallest hiccup somewhere out there in the world may cause a little bit of tizzy in the market. I'm not bearish on the markets, but I'm saying we are so far high that we need perfect environment for us to maintain these levels. Otherwise, we could trip up. In fact, you can see my potential there. We were tracking my upside scenario, with these arrows up from the circles. So my target is still up higher. We're tracing this this breakout here perfectly. So I'm not bearish on the markets. I'm not bearish on Hyliion all by itself, but I'm raising the concern that it has on this bounce level right here. And I'm leaving it at the daily chart because it's easier to see. I don't want to get into the nitty-gritty of 5 and 10-minute charts. I don't like this. Don't know what's going on internally with the fan base, but you know, down 32% in a few days is suboptimal, as they say. The only thing is that they've done it before, and it was down more, and they held like a rock. They held like a rock. Well, come and test that rock enough times, and if it opens up, it's a trap door to disaster. So, trading. If I own it, I want to see what happens here. If I want to own it, I could nibble with a tight stop. What is a tight stop? It means as soon as it breaks through, my assumption is wrong, that this floor is not holding, so I should just get out. How can I get long? I can own shares. I can own calls. Calls makes it a finite amount where I can set it and forget it. Say, okay, I'm going to risk X hundreds, whatever that amount is. When I buy a lottery ticket, I don't make it so big that if I don't win, I'm distraught. The point of a speculative bet, when I don't have advantage, is to make it small enough so it doesn't break my piggy bank or my heart, and be completely upside. Like, yay, look at this win, or it's like, I tried. So that should be the reaction from a lottery ticket. I don't go all in, and I definitely don't average down. Why do I say that? Because this is an unproven concept. It's not Apple. It's not Tesla. You average down in Tesla, that's probably okay. You average down in something that is unproven, it's not okay. I'll give you an example, the silliest example of all. During the dot-com bubble, they were buying everything eyeballs, and there was a company called Webvan. I think it was just purely delivering groceries online, basically. You order, and the groceries show up at your door. Imagine how successful it would be now, right, during the pandemic, in the Amazon era. They went out of business. And my best friend of all time, been friends with him since we were 5 years old, kept averaging down until it just poof, disappeared. And that was toilet paper, basically. You know, the stocks you held, if you actually collected the paper, would be just garbage. Even though the company was so far ahead of its time and so successful of an idea, the company failed. I'm not saying this is what's happening here, but I have to be open to this, the downside scenario. So again, the optimistic view is, my instinct is, it should hold. But if it doesn't hold, I should be open to the idea of, moment. Like Scooby-Doo, rat-roll. What happens after this? It's a free-for-all down below that. The machines will have very few things to ping against. Maybe 1530. Maybe. Then maybe 1280. So these are two numbers you should remember, 1530 and 1280. Other than that, straight shot to down in the single digits. Not my scenario. I can't tell you how many times I have to say it, and I still get in the comments somebody calling me a moron for thinking and calling it the disaster. I am not. My base case is it should hold because there's so much bad consequences from it. If it doesn't hold, how to trade it? If I own it, I see what it's going to do here. If I want to own it, I can nibble. Buying stock, if I believe in it, one way. Buying leaps in the calls, another way. They should be cheap enough. Buying call spreads, that'd be the least expensive, most sane way of doing it. Something like $10 wide up here to see if it's going to swing wide. When? Next year, far, like middle of the year maybe. Give it time to brew. If they swing up, they're going to find resistance into 25, 24, let's call it, plus or minus a buck. If they get above 27.50, it's a trigger point because it was a massive fail. It's a trigger point that could get it to above 30. 35 should be like extremely hard to get through, but with time, everything is possible. Job number one is hold your bottom. So you can listen to the experts. I am not claiming I'm an expert on this company because I am not. I note charts, and that's what I just spoke to. What happens in any chart? Just hold the company blind, like put a mask over this, a band-aid. These would be my comments. Falling into support should hold, because if it doesn't, the consequences are severe. If it does hold, it has a chance at tackling resistance in a couple of weeks, couple of months, and then finally have a super big battle around 27.40. If it wins that battle, then we can talk 30s. If it gets to 35, I'm out. Thank you very much for the trade. Nick signing out.